Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to Apply. All right, so today I have Larry Dorfman on the line. He's co-founder and partner at Roots Real Estate Investment Community. Larry, welcome to the show.
Good morning, Adam. It's nice to have an opportunity to be here. Thank you.
All right, Larry, so I'm excited to get into Roots and really how you're helping investors and also the investment community in general. As everybody that's been listening to this show for a long time knows, I'm a big fan and proponent of building a community, not just a business. So I'm excited to get into how you're doing that over at Roots. But before we get into that, we'll start this episode the way that we start them all with our Mission Matters Minute. So, Larry, we at Mission Matters, we amplify stories for entrepreneurs, executives, and experts. That's our mission. Larry, what mission matters to you?
Yeah, well, Adam, at Roots Real Estate Investment Community, our mission is to help 1 million people build wealth by opening real estate investment up to the masses, literally to accredited investors, non-accredited investors, and in particular to the residents who live in the properties and actually pay the rent.
Awesome. Love bringing mission-based entrepreneurs and executives on the show to share why they do what they do, how they're doing it, and really what we can all learn from it so that we grow together. So great having you on. And I guess, just to get us started, before we get into Roots and before we get into your model, which I find very interesting, how did you start out in real estate? Like, where'd this all begin?
Well, it's a great question, and I have the wonderful pleasure of telling you that as a professional real estate person, I have almost 2 whole years involved. Prior to that, as an investor, many years, dozens actually. But I was running a different kind of business in a whole different world. And one of my sons, who's been in real estate for well over a decade, actually 13 years now, I think, came up with the concept of Roots. And during the pandemic, when we all had a lot of time to chat, kept bringing it to me as, here's this idea. And I kept going, that's a wonderful idea. Go do it. And then all of a sudden it was, no, you're misunderstanding me. I'm thinking we should do this.
Yeah.
And I was like, are you sure? Because I might be known to have a bit of an A personality, and I've avoided being in business with any of my 5 children, quite frankly. But of the kids, Daniel is the most zen of them, if you would. And this idea of his was pretty compelling. And so I got permission from his mother and all 4 siblings, basically, to participate. It has been an absolute dream to work with him and to follow his vision down this road of Roots.
Oh man, that's a great story, and this is a new one for me. And I got to tell you, Larry, I'm over 5,000 interviews, and I haven't heard this quite one. So you got and the permission from the rest of the family. You're going to you start the business. You're obviously an experienced real estate investor on your own end, and now you're thinking about funds and bringing in investment capital and building a community around it. Maybe start with Daniel's just the vision and like some of the construct of the company and what makes it unique.
For sure. Daniel's initial vision really built around the concept that real estate investment has a moat around it. It's had a moat around it for years. I mean, only less than 10% of Americans are accredited investors making more than $200,000 or $300,000 if you're married, or having more than $1 million in net worth without your house. And so investing in typical REITs other than a publicly held REIT, but privately held opportunities really restricted to the accredited investor unless the individual wants to go buy an individual rental home, which is really what your show's about and what other shows are about, which I really enjoy, is that this concept of building your real estate wealth, sometimes 1 and sometimes 10 units at a time. Mm-hmm. But as you well know, the liability of jumping into that first property, it takes bravery. He was selling houses, he and his wife Roseanne, with a boutique firm that they own in Atlanta, happens to be called Roots. And pretty much anybody, they really specialize in helping people get their first home. And sure enough, in almost every conversation, somebody say, I'd love to get into where I have some rental property. Let's start looking for a rental home. And his suggestion to them was, let's make sure you're financially capable of handling that first. It means you're going to be taking a second mortgage. And typically, the banks are going to want your income without the rental income to cover that mortgage. the average person. Every time anything's wrong with the roof, the air conditioner, the plumbing, you're going to get to fix it. And you need to make sure you're in a position to do it. And he certainly has bought many rental homes for people, in particular people from California these days that are coming to Georgia to invest, because buying a rental home in Atlanta and getting in LA and getting a return might be challenging at this time. So he's helped many people do it. Then he started to syndicate properties, and he would put 5 or 6 or 7 investors in with 50, 60, 70 grand apiece and go buy the property and then either renovate it and flip it or renovate it and rent it. And that worked very well. His concept here was, though, to open up investing to the masses, really create an opportunity for people to come in and build real estate wealth, just like the accredited investor does, literally with as little as $100, and start to build. So you take that concept, and as we continued to talk, it occurred to Daniel that, there are a few very significant risks in real estate. Number one, is the property rented, right? If it's not rented, you got a problem. Well, making sure that he built a fund that only bought homes that were fully rented was the first step. He calls it de-risking the investment. The second one is repairs and maintenance. Those things can jump on you pretty good. And so we built a fund where the sponsor to the fund actually buys the properties, renovates the properties, gets them ready, rents them with a target of 6% or better cash-on-cash returns. And then the fund buys them. Secondly, the reserves you typically put away to repair your property, those are reserved for, but they're paid into the sponsor, and the sponsor has to guarantee all maintenance and unexpected repairs. So in preparing to have average income folks be able to invest, he wanted to de-risk it so that it was a very consistent investment. So these are the ideas he was coming with. And then the last one was, what about the residents? How much difference could the resident make in the value of the property if they actually own some of it? If they, and this is a trademark term, live in it like they own it. In other words, pay your rent on time. We're mostly workforce housing. Take care of the property. Be a good neighbor. And once a quarter, just do a quick video and let us know what needs to be worked on and show us that the place is in good shape. So now I told him he was out of his mind with the video, Adam.
Yeah.
I'm like, buddy,
this is next level. Yeah. Go ahead.
I'm like, buddy, what are you talking about? Oh, these people are busy working 2-3 jobs to pay the rent. They're not taking a video. Adam, since March of 2021, over 80% of our residents have done their video, and over 78% have earned 100% of the rental rebates they get for doing so.
Wow.
If they pay their rent on time, take care of the property, and do the video. Once a quarter, we pay them between $50 and $100 in rental rebate, and our rents are not overpriced. It's just less expensive to have them help us take care of it than to send somebody out to change a light bulb. So he proved me totally wrong. And
wow.
It's really amazing to see what an engaged resident can do to improve the value of your property. We're learning that they stay longer.
Yeah.
That they will take care of little things. They apologize for calling in for something that's wrong. I'm seriously. I mean, a water heater will burst, and they'll say, "I'm really sorry, I'm calling, but there's water everywhere."
Yeah.
And but you get these people as partners, and many of these people, as you'll see if you go to our website and see some of the testimonials of these folks, it's the first time they've ever owned real estate, and they're very proud to own a piece of a portfolio. Because they don't just, by investing, they don't just own a piece of their home. They own a piece of everything the fund owns. So that's how the idea came. We kept when the pandemic was happening, Daniel and his family were renovating their house, and they moved in with us for 9 months, and we had dinners every night. So it just sort of kept developing, and we kept sharing ideas.
Wow.
The concept for me. A bit older, as you can tell. For me, and for Adam, for Daniel as well, is very important. Is your why and what we're doing in the community and everything else. I mean, you can hear his ideas, but for me, I really see the rental community as a fringe homeless community.
Mhm.
And the reason I say that is that the average renter in America makes less than $60,000 a year, the average renting family, the household.
Mhm.
With the rents up in the 1,500 range, and I don't know about where you are, but in Atlanta, Georgia, the rents went up over 28% since January of 2021.
Mhm.
Now, I'm going to tell you that the average earner did not make 28% more income.
Mhm.
And so when you look at that, one incident in a family's situation where they make that little money, pay that much rent, and the average household savings, lifetime savings, is less than $650. So it's really a borderline homeless situation. So when Daniel came with this, I'm starting to think, okay, well, that can make a significant difference if we could help somebody take the security deposit that they pay, and instead of thinking, which they do, and believing they'll never get it back, it's just a cost of renting.
Mhm.
And by the way, when they don't think they're going to get it back, they don't take care of the property, so you have a double whammy.
Mhm.
But all of a sudden, the minute they come in, they can invest that money and start making the returns that the fund makes. Historically, it's been 15 to 18% over the first year and a half, 2 years. So they can earn money, put their rebates in every quarter, continue to build wealth. And right now, we've got somewhere around 70 residents or households that have in excess of $2,200 saved each, and that's less than a year and a half.
Wow.
Almost quadrupled their life savings.
I'll tell you, the model and what you described. So, Larry, first off, I think it's amazing, and it's so interesting to me because, so my first property, and this is taking me back, many years ago to my early 20s. I remember I was one of the, live in one of the units, rent the rest out in a little fourplex. And so I got to kind of see what the residents in that area, I was young, I was single, I didn't have any real obligations, so it wasn't normally the apartment or the area I'd always live in, but it happened to be at that point. So I got to see firsthand what you're talking about. And how important, and how if something happens in the family, people don't necessarily not want to pay rent. They're not if something happens, they got to fix a car or something else happens, that can really affect them to get behind, and it's not something that they can necessarily catch up on immediately. So all the things you're talking about in savings and otherwise are right. And then the other part of it is the rewarding responsible, renters and individuals to take care of the property. I happened to be fortunate to live on site, so there was a lot of that, to where there was a lot of pride in our property and everything else from the community. But I was there, so it felt like a little community too. But I would look at some of the other housing and areas around our property and the community we'd built, and it wasn't the same case. You had a lot of, absentee landlords and other things, and it was just one of those things. So what I can see is that it seems to me like what you and what Daniel, and yourself are creating, it seems like a very scalable ecosystem of good for all parties involved. And speaking of the party, so I get the model now. I think it's a great model. It's innovative. I haven't quite heard something like it, especially when you talk about the video portion and that. When you told me this and I was listening to it, my first thought was what? But then when you told me the 80%, I can imagine, especially for the tenants that are there for a while. So some tenants will be there, 5, 6, 7 years, who knows? I mean, that's how some of the tenants that I've been in that property when I was there, I remember some of them been there way before I was there, and they'll be there way after I was there too. They built a life around that community, so they ain't going anywhere. And so when I think about it, I bet you on some of those videos, some of those are almost testimonials. They're saying higher and other things. I can see over time. I'm not saying that's happened, but I can see it.
Cool.
I'd be surprised. They'd be and they might even throw in a thank you for fixing the water heater last month, and we appreciate it. I can see kind of the ecosystem and community being built at scale, almost like social media. I can see it.
That's the vision, is to get these people to really share what's going on. We don't have a video of it, but we do have the story of one guy who actually replaced his own toilet, and and he's telling us about it. And I'm like, why'd you replace your toilet? He says, well, it was fine, but I had this buddy, and he had these new toilets come in, and he gave me one of them, and I'm like, well, my toilet looks old. I'm gonna put the new toilet in. And of course, not being the real estate guy, I'm going, that's awesome. And Daniel's going, no,
don't start working on it. Yeah, don't start working on it. No. No, I'm cringing too. I'm on Daniel's side. I'm like, no. Next thing you know, and how was the work done? Oh no.
Yeah, we have some funny moments where I'm not the real estate guy, although I've learned a lot in a couple of years. He is truly special to watch him work, and I'll think something's really cool, and he'll be like, "No, Dad, that's really probably not what we want. That's a bad idea."
Well, I'm glad Dad is providing the training wheels over there. That's awesome. It comes full circle, right?
Yeah, all the investors can feel comfortable that Daniel is in charge.
That's awesome. So speaking of the investors and how that side works, so we've talked about the model. Let's definitely spend some time on the investor side of things. So you mentioned de-risking the investments by making sure that they're occupied. Go a little bit further into like what investors can expect and kind of that side of the equation, if you will.
Love to. So one of the things is how I was in the car business previous to this, and the dealers and automobile dealers will tell you that you make your money when you buy the used car, not when you sell it. Because if you're good, you'll sell it at market, right? If you don't have to sell it, you'll sell it at market. But when you buy, you want to buy when somebody needs to sell, if that makes sense. So we're not the guys out there hunting somebody who's been foreclosed on. We're not sitting on the bank steps. Let all the institutions fight for those homes. In fact, we've talked to some banks trying to get them to introduce us to people who are in a challenging situation, who could use someone who could pay off their mortgage, give them some cash, maybe even let them live there and build their equity back. For some reason or another, Adam, the banks don't want to do that or say it's not legal. It is not. It is legal, but they just don't want to do it. It's too much work. And I'll also tell you that this getting 80% plus in videos is not automatic. It's work. It's follow-up. It's residential experience with very good young people reaching out to these folks over and over again and helping them understand how they make money, because most of them have never had this opportunity. And it took us several quarters to get them to understand. They really could see their statement grow. And they didn't believe us at first. Now they do. And so now as we build this proof of concept, it gets easier and easier each time. So what an investor can expect is that in the first 12 months, we made 18%. I made 18%. We paid out 6% in dividends. We are a privately held REIT. And as a REIT, we have to pay out over 90% or more of our pre-tax profit. So we just designated, and Roots has been profitable from day one. Average vacancy rate under 4%, and that is only on turns. It's always full when it goes in. And we've been 100% for 2 quarters in a row, and then we got a couple of turns. Yes, you're going to have turns for whatever reason. So when we look at it, that 6% that came in was paying out per unit or per share, 1.5% per quarter, so $1.50 on a $100 unit. As the net asset value of the fund went up, we continued to pay $1.50, so it was a little bit less. It went down to about 5.26% towards the end of the year. But the first year was 18%, and of that, 6% was distribution, and right at 12% was appreciated value of the net asset value. Now, if anybody asks somebody to invest and tells you you're going to make 12% increased value on the properties you own each year, you should run as fast as possible from that circumstance, right? That's not what we're doing. What we have done, and Daniel has perfected this over the 13 years he's been in the business, is we really do spend a lot of time hunting property. We have a lot of relationships. Daniel's relationship in the real estate business in Atlanta is very strong, with literally hundreds and hundreds of agents, all of whom, when they have this situation where there's a home that needs to be sold, they'll just pick the phone up and call. And the other part of that is we'll make a lot of offers to find the ones that we want. So we're really not trying to buy 100 or 200 properties a month. We're trying to buy right now 5, 10, 15. That's what we're trying to buy. And so by doing that, you can go identify the particular property you want. And we've been able to purchase in the I won't call it a holding company. It's actually the sponsor of Roots. We've been able to purchase properties about 16 to 18% below market.
Wow.
For whatever reason. And that was during the hot market in Atlanta, Adam. That was an example. 9 duplexes we purchased for $1.5 million. We put $277,000 into it, and it appraised for $2.2 million at that time. Now, that property was purchased by Roots for $1.9 million, $1,940,000. And that property today appraises well over $2.5 million. So by going and buying the right properties, a lot of them are tired investors, Adam, who were ready to sell them.
Yeah.
And as we buy them and fix them, Roots has purchased them now 31 properties at an average of 11.7% below the appraised value that Roots got it appraised for to buy it. At the moment of purchase. From there, we expect our properties to appreciate like anybody else's, 3.5% a year over a period of time. We're not worried about a downturn or an upturn, just nice, consistent returns over the years. So that explains how we get the kind of returns. The 12 months ending December 31st, 2022 came out at 16%. Still very happy. Our target market is in the 15 to 18, and we don't promise any committed returns. We just basically target where we want to go and then tell you, how it's done, during in the history of the company. So,
well, Larry,
that answers the question.
It absolutely does, and I'll have to say this has been great having you on the show, and it's just a great story to hear. That you and your son partnering up and really creating a new innovative model. I believe it's new and innovative. Maybe I haven't heard of anything quite like it, especially involving the renter side of it. That being said, Larry, if somebody's listening to this and they want to learn more or they want to connect with you and your team, what's the best way for them to do that?
The best way to do that is just go to investwithroots.com. And the story's told pretty well there. You can also reach out to me directly at ldorfman@investwithroots. It's DORFMAN, investwithroots.com. You can hit my cell phone at 404-732-5910. That's been available to people for all 45 years I've been in business. So, well, actually, before that was a home phone number. But we appreciate you having us on, Adam, and you're a great interviewer, and just your knowledge of the business really helps us feel good about where we're headed with this.
Very kind, Larry, and great having you on. And we'll put all that information in the show notes so that our audience can just click on the links and head right on over and check out your site. And speaking of the audience, if this is your first time with Mission Matters or connecting with the platform, we're all about bringing on business owners, entrepreneurs, and executives and having them share their mission, the reason behind their mission, and really what we can all learn and gain from that so we all grow together. Again, that's the whole point of the platform, so we can all learn and grow together. If that's the type of content that sounds interesting or fun or engaging to you, then hit that subscribe button, because we have many more mission-based individuals coming up on the line. We don't want you to miss a thing. And Larry, again, really, it has been a pleasure. Thanks again for coming on.
Thank you. Take care.